Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, I'm Sandy, your guest host from Keller Williams Legacies, here to provide you with insights sourced from reputable news outlets to help you stay informed.
Steve Hamoan here. This is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
All right, Steve, let's get into this interesting study from the Canadian Association of Financial Institutions in Insurance. According to their research, half of Canadian mortgage holders could only maintain their lifestyle for less than 6 months without their primary income. That's a pretty significant finding, don't you think?
Absolutely, Sandy. It really highlights the financial vulnerability many Canadians are facing right now. The study surveyed over 3,000 Canadians and found that 44% of mortgage holders report that the current economic situation is negatively impacting their personal finances. What's also concerning is that 57% of them have concerns about job loss in the next year.
And even more troubling is that 50% say they would have serious problems paying bills if their main earner were unable to work. It seems like there's a real gap in confidence regarding financial protection. Despite having insurance, many Canadians aren't confident in their safety nets.
That's right. The study found that 35% of people don't know how long their life insurance policy would last if needed, and only 38% feel confident they could pay their mortgage if the main earner lost income. It's a wake-up call for many, especially with the average household debt levels being so high.
Keith Martin, the executive director of CAFI, pointed out that there's a troubling contradiction here. Canadians are aware of their vulnerabilities, yet many remain underinsured or uncertain about the protection they have. Only 38% feel confident in covering their mortgage if income is lost, and more than a third don't even know how long their life insurance would last.
Exactly, Sandy. There are distinct consumer segments identified in the study, like the confident planner and the anxious realist. These groups have varying needs for protection and support. For instance, the confident planners, who make up 26% of mortgage or home equity line of credit holders, value credit protection insurance for asset protection, even though they might be in a strong financial position.
And then there's the anxious realists, about 25% of mortgage or HELOC holders, who are struggling with affordability, but stand to benefit the most from protection. Despite financial constraints, 27% of them are likely to purchase or renew coverage. These segments point to clear gaps in confidence and coverage that's leaving many families financially vulnerable.
Yes, and even among current credit protection insurance holders, there's skepticism. Only 30% agree that the product provides good value for money, and just 29% find it affordable or trust it more than other insurance types. Expense and lack of perceived need are major barriers for non-holders.
Communication gaps are also an issue. Only 39% of non-holders recall being informed about CPI options, and a significant portion don't know enough to rate basic product attributes. This lack of information makes it harder for consumers to make informed decisions.
That's a critical point, Sandy. The research shows that while most Canadians learn about credit protection insurance from banks and credit unions, consumers often get mixed messages from financial professionals. This confusion underscores the need for better support in making informed choices.
And it seems Canadians are most likely to explore protection options when their finances feel stretched. Nearly half of respondents said they'd consider CPI if bills became hard to manage, with economic uncertainty and rising costs being significant factors.
Right. And Keith Martin noted that this research provides a roadmap for better meeting the needs of financially vulnerable Canadians. There's a real opportunity to close protection gaps, improve communication, and demonstrate value, especially during life transitions and economic stress when families need protection the most.
So, Steve, let's dive into renewing a mortgage in 2025. According to the Canada Mortgage and Housing Corporation's Residential Mortgage Industry Report, About 1.2 million Canadian mortgages are up for renewal this year. That's a huge number, especially considering that 85% of these mortgages were initially taken when the Bank of Canada's key lending rate was at or below 1%.
That's right, Sandy. With interest rates now in a higher environment, many Canadians are facing new challenges. A recent TD survey found that more than a quarter of respondents, 27% to be exact, said they don't have a strong understanding of mortgage affordability or how to make their mortgage more affordable. It's crucial for homeowners to be informed and proactive as they approach renewal.
Absolutely, Steve. Gino Caputo, Senior Vice President of Real Estate Secured Lending at TD, laid out some critical questions homeowners should ask themselves when renewing their mortgage this year. The first one is whether a fixed or variable rate mortgage is better for their personal financial situation. Considering potential changes in income, like a job loss or a promotion, can really impact this decision.
Exactly, Sandy. Caputo emphasizes that the choice between fixed and variable rates hinges on a homeowner's debt service ability. If someone is dealing with inconsistent income or significant debt, a fixed rate might provide the stability they need. On the other hand, if they've increased their income and can manage higher payments, a variable rate could be more appealing.
Another important question is whether to renew the mortgage or refinance it. For homeowners looking to access more funds from their home equity or consolidate debts, refinancing might be the better option. Plus, if they're considering renovations or purchasing an investment property, refinancing could provide the necessary funds.
Right. And if they're planning to sell the home soon, choosing a shorter term and an open mortgage could offer the flexibility they need. Caputo suggests that consulting a mortgage professional can help homeowners understand their risks and choose the best option.
Timing is another critical factor. While no one can predict future interest rates with certainty, some homeowners are waiting until the last moment to renew in hopes rates might drop. Meanwhile, others see the value in locking in their rate early to avoid potential hikes.
It's a balancing act, Sandy. Many lenders allow you to lock in a fixed mortgage rate 120 days before renewal. This can provide peace of mind if rates increase in the interim. But it's important to weigh the risks and benefits carefully.
And finally, seeking advice early can make a big difference. According to the TD survey, 37% of respondents felt that easier access to trusted advice would have led them to make different mortgage decisions. Starting the renewal process 6 months in advance gives homeowners time to consult with professionals and consider their options.
That's sound advice, Sandy. Giving yourself ample time to discuss with a mortgage professional and review your current and anticipated financial situation can really help in making the best decision for your renewal.
Now, let's shift our focus to an exciting development in Burlington, Ontario. Fengate Asset Management has teamed up with the Molinaro Group for the Paradigm Grand Condo development. This project is a significant investment, valued at $240 million, and will feature an 18-story condominium tower.
That's right, Sandy. Despite the challenges in the current condo market, this project is moving forward with confidence. Fengate, along with their strategic partner Liuna Pension Fund, sees great potential in Burlington due to its population growth, economic stability, and excellent access to transportation.
Indeed, Steve. The Paradigm Grand project will bring 388 housing units, along with 18,000 square feet of retail and 12,000 square feet of office space. It's designed to appeal to young professionals, with amenities like a pool, spa, fitness center, and more.
And it's not just about the amenities, Sandy. The location in Burlington provides strategic advantages, such as proximity to the 400 series highways and light rail transit, making it an attractive option for commuters and investors alike.
Colin Catherwood from Fengate mentioned that the project is operating on a fast timeline, with 70% of units already sold and occupancy expected by late 2026 or early 2027. This kind of swift progress is impressive, especially in a market that's seen some struggles recently.
Absolutely, Sandy. It's a testament to the strong partnership between Fengate and Molinaro. Their decades-long relationship is proving beneficial as they navigate the complexities of this development. Molinaro will handle the day-to-day operations, while Fengade provides strategic guidance.
It's also interesting to note that the condo market is experiencing a shift towards owner-occupied units, moving away from the speculation-driven market of the past. This trend is seen as a positive change by many in the industry, including Fengate.
Right, Sandy. As Colin Catherwood pointed out, there's an opportunity to pivot some condo units to purpose-built rentals, which could address housing affordability issues. It's about adapting to the market's needs and finding sustainable solutions.
Fengate is also expanding its portfolio with investments in multifamily and seniors housing. These developments, like the Church and Main project in Brampton and the seniors' residence in Oakville, reflect a broader strategy to diversify and address various housing needs.
Yes, and these projects are aligned with government initiatives to support affordable housing. Recent changes to the harmonized sales tax and development charges, particularly in Toronto, are creating more favorable conditions for such developments.
It's an exciting time for real estate in Ontario, with innovative projects like Paradigm Grand leading the way. As the market evolves, these developments are setting new standards for community living and investment.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time and stay informed with the latest industry insights.